So to this unit, we're going to be looking into it differently. Last week was just summing up what was happening in the transactions. We were looking at it from the bigger picture. Now we're look more deeply into each individual accounts. And so we are going to be looking at using T-charts or T-accounts. And they're called this because it's just simply a T that we are going to be using to help us see issues. And so the left-hand side is the assets on the equation, and the right-hand side is the liabilities plus owner's equity. This is what we had to deal with last week. There's nothing new with that. A record summarizing all information affected in a single item in the accounting equation is called an account. So you'll have like your cash account. You'll have your account for a certain vendor for what they owe you. You'll have your account to a certain vendor. You'll have your supplies account. You'll have your owner's equity account. You'll have different expense accounts. And so each account is going to have its own T account. And the debit is recorded on the left, and the credit is recorded on the right every single time. And it will look, a T account, you'll put the account name up at the top. On the left-hand side is your debit side. On the right-hand side is your credit side. The way I remember the way it goes, this is DC Comics. And so assets, the left-hand side of the equation, is the increase side. On liabilities, the right-hand side of the equation is the increase side. And so the normal balance is on the increase side. That is a side that we should have. So unless you have overdrafted the account, you should have your increase side that way. So let's look at this as a bigger picture. So any asset, you're going to increase on your debit side, decrease on your credit side. And then any liability, we're going to decrease on the debit side, increase on the credit side. And capital account is going to be the same way. So to draw a T account, we are going to have your left-hand side is going to be increasing with your assets, and the right-hand side is increasing on your liabilities and owner's equity. And assets are on the left of the accounting equation, so assets increase on the left are the debit side, liabilities are on the right-hand side, and owner's equity or owner's capital is on the right-hand side. Therefore, they increase on the right-hand side or the credit side of the account. That's the reason each one has their own side. So let's look at a couple of problems. Let me get out of the slideshow, and let's look at the work together. So for each T account, we are going to go through and label debit, credit, which side's the increase side for cash? Because cash was a asset, so it is going to increase on the left, decrease on the right. And its normal balance, the side that has the positive, was the debit side, so that's our normal balance. Accounts receivable. So if we look at our different types of accounts, accounts receivable is an asset. So again, debit and credit are going to be the same no matter what type of account it is, but we are going to increase on the debit side, decrease on the credit side, and our positive side or the increase side was the debit, so that's who gets the normal balance. So again, you're looking for the increased side, your positive side. That is who the normal balance goes to. Now let's look at supplies. Supplies is a asset. So we're going to, again, debit, credit, and Asset means we increase on the debit side, decrease on the credit side. Normal balance shows up as a debit. Prepaid insurance. Debit credit doesn't change. But prepaid insurance is a asset, so therefore we're going to increase on the debit, decrease on the credit. Normal balance is again debit. So now we're switching gears. Accounts payable, that's who we owe money to, so that's a liability. Debit credit doesn't change, but we're now on the right-hand side of that equation, and so that means it's going to flip. We're going to decrease, and we are going to increase. And so now our increase side is on the credit side, so our normal balance is on credit side. So if it's on the left-hand side of that equal sign, we are going to have our normal balance show up as on the credit. Accounts payable, debit, credit doesn't change. Accounts payable is a liability. So therefore, we are going to decrease on the right, on the left, and increase on the right. And our increase was under the credit column, so we're going to mark it as credit. Debit credit doesn't change no matter what account you have. This is a capital account, so that was our asset, that was our owner's equity. That means it's on the right-hand side of the equation. So we're decreasing on the left and increasing on the right. Our normal balance is going to go on the increase side, which was on credit. Save and continue, and you do the on your own by yourself, as well as a 2-1 application before you come back to class. Thank you.